Let's talk about tips. The extra cash you get for great service, whether it's a few bucks slipped into your hand or a generous stack at the end of a busy night. No matter if you're a server, a barista, a hairstylist, or anyone else working hard in the service industry, tips can make up a big part of your income. There's a common myth floating around that tips are just free money, a little bonus that doesn't need to be reported to the IRS or included on your taxes. It sounds tempting, and maybe you've even heard co-workers say it, but the truth is, tips are considered income by the government, just like your regular wages. The IRS doesn't see tips as a magical bonus. They see them as taxable earnings that you're required to report, whether you get them in cash or on a credit card. So before you spend that cash, know that the tax-free tips rumor is just that, a rumor. Not reporting your tips can actually get you into trouble later on. Understanding the real rules can save you from headaches, penalties, and some nasty surprises down the road when tax season rolls around. We're here to break it down, bust the myths, and help you keep more of your hard-earned money, legally and with peace of mind. Let's get into what you really need to know about tips, taxes, and how to stay on the right side of the law while maximizing your earnings. The IRS defines a tip as any voluntary payment a customer gives you for good service, cash, credit, or even non-cash items like gift cards or tickets. If a customer leaves you a little extra for going above and beyond, that's a tip in the eyes of the IRS, no matter the form it takes. All tips, whether left on the table, added to a card, or even given through digital payment apps, are considered taxable income. It doesn't matter if you get your tips in cash at the end of a shift or see them show up on your paycheck, every bit counts. You're required to report every dollar, just like your hourly wage. That means keeping track of your tips every day, not just guessing at the end of the month. The IRS expects you to keep accurate records of your tips and report them, including cash, credit, and any tip-sharing arrangements with co-workers. Even if you split tips with others, your share is still your responsibility to report. Wondering how they'd ever know about your cash tips? The IRS uses industry averages, sales data, and even information from your employer to estimate what should be reported. They have systems in place to spot inconsistencies. If your reported tips seem unusually low compared to your sales, it can trigger a red flag and possibly an audit. That's a headache nobody wants. Bottom line, it's smarter to be honest from the start than risk penalties, interest, or even legal trouble later on. Treat tips as part of your official income, just like your regular paycheck. It's the responsible thing to do. It's not as fun as free money, but it's the law, and following it keeps you out of trouble. So are there any real exceptions? Rarely. The only time a tip might not be taxable is if it's truly a gift, given out of pure generosity, not as payment for service. For example, if a customer gives you money for your birthday or to help with a personal crisis, that could count as a gift. But if it's tied to your work, it's a tip and taxable. The gift exception is extremely rare and hard to prove. For almost everyone in a service job, tips are taxable income. Don't count on loopholes. Assume your tips are taxable and report them. It's the safest way to avoid trouble. What really happens if you don't report your tips? It might seem harmless to pocket a little extra cash, but the consequences can sneak up on you fast. The IRS can hit you with big penalties, up to 50% of unpaid Social Security and Medicare taxes, plus the taxes you owe. And if they find a pattern, you could even face audits or further legal trouble. But it's not just about fines or scary letters in the mail. Not reporting tips can hurt your future in ways you might not expect. When you apply for a loan, car financing, or a mortgage, banks look at your official income, not what you actually make, but what you report. If you underreport, you might not qualify for the loan you need, even if you work hard and earn enough in reality. Your Social Security benefits, as well as unemployment or disability payments, are also based on your reported income, so underreporting now means less support later. Skipping tip reporting means less money when you need it most. like during retirement, medical emergencies, or tough times when every dollar counts. Being honest now protects your financial future and gives you peace of mind, knowing you're covered. It's not just about avoiding the IRS, it's about setting yourself up for long-term success and stability. Play the long game, report your tips, and invest in your own future security. Managing your tips doesn't have to be stressful. Keep a daily log of all your tips, cash and credit. Use a notebook or an app. If you make $20 or more in tips in a month, report it to your employer by the 10th of the next month. This helps your employer withhold the right taxes and keeps your records straight for tax season. Know your state's rules. Tax laws can vary. Ask your employer about their tip reporting process and get clear on how tip sharing works. Staying organized and honest protects you, helps you qualify for loans, and boosts your future benefits. You work hard for your tips, manage them smartly, and set yourself up for a secure future.